Again, ladies and gentlemen, welcome to another week of State of the Market. I think by now you all know I am Marc Fattore, and always joined by my lovely co-host, Jennifer Dolh. And as you know, guys, every week we are jumping into more and more about what is going on in the market within the commercial, residential, finance spaces of real estate. So, Jennifer, you do have a set of questions that have come in again this week. I'll let you take them away.
Thank you. I do have 3 questions as always.
Yep.
I've summed up questions based on what you guys have provided me with. Number 1, since March 2020, when the world shut down due to COVID-19, we witnessed a global shift into the use of technology in almost every single way, shape and form. How has technology affected housing prices?
Awesome question. So I think the way I see it, guys, of course, all the time, this is an opinion of myself and probably Jennifer as well, but the way that we've seen real estate valuations accelerate over the last, let's say, 2 years, I purely do believe is because of the, obviously, lockdown and the fact that, you know, we're up against each other. I had heard in previous times that some very intelligent developers, I won't mention today, but they had mentioned that if the country had gone into some form of lockdown many years ago, they mentioned this, that we would be in competition with each other, and I think that was quite evident. One thing I did notice was in a certain period of 2020 when we were supposedly in a form of recession, let's say, only lasted for a short stint. We saw that the government had done a lot as well to promote economic activity. So I think technology has been a major driving factor behind that. We're not dealing with 100 years ago where it would have taken 3 days for tabloids to reach specific type of let's say investors in certain parts of the country, things like that. But there's also quite a lot of other contributing factors which we won't go into today. But I think there's technology in the last 2 years alone has certainly driven us into crazy times, and will continue to do so as well, because we do have access to very, very fast data, which gives us access to making a decision a lot quicker. Hence why things are going up. So
yeah, totally, I agree with that. Question number 2. So there are some key takeaways from our housing market here in Australia.
Yep.
The first one being the most of the capital cities across our nation are seeing a drop in growth rates. Was this pre-cash rate hike earlier this year?
Yeah, look, I think we could probably all say at the back of 2021, there was certainly a lot of media hype to say that, we're probably going to see a drop. It was due because we had gone up so hard. We needed to see that correction in order to get back on sustainable, let's say, growth patterns. Look, I think, before interest rate hikes, things like that, yes, there was a slight dip. I certainly did notice it. It was also just a market sentiment, things like that as well. Definitely something that we have seen a lot with our clients is the fact that, if we do comparisons from this time, this year to last year, the difference of motivation to want to get into the market is very, very different. So, but with that said, we are also filtering out and getting the serious investors on board, and I think that's what counts the most. So, yeah, definitely a contributing factor was certainly seeing that, prices were already kind of starting to ease, or sentiment was starting to taper off slightly with that FOMO feeling, and then obviously cash rate rises did definitely contribute to that as well.
I believe the RBA is announcing something today. I'm not too sure.
Yeah.
We'll see what happens here. Another major key takeaway has also been that owner-occupiers numbers have declined more rapidly for investors this year. Is this something that you have seen frequently with the current clients or your existing clients that you're dealing with? Yeah,
definitely. It's something that we have certainly seen. We are seeing a lot more people, obviously hold on to a little bit more now. They don't want to just be as fruitful, let's say. They're a bit more frugal. It's not a bad thing, of course, but yes, when it comes to obviously the owner-occupiers pulling off the markets, it does obviously balance out, and we do see that they're going to do something with their money. So a good example would be someone who may have received a pre-approval in Sydney, let's say 2 years ago, or even 9 months ago, we'll call it, may have been able to buy something at that time, whether they're still able to buy now, but that pre-approval may have dropped down a little bit now, and they might only have 850 as a pre-approval. Now, with all of that said as well, what that then allows us is to go, well, I can't afford something in Sydney anymore, as an example. What's my next best option? Well, I'm going to at least move my money. I've got the pre-approval in place. I'm going to invest it. So I'm going to buy maybe a $600,000-$700,000 investment interstate, and that's where we're probably seeing that trend of owner-occupiers dropping and investors starting to rise as well.
Yeah, that's That's great. Okay, so that's it for today's
another
questions.
Hopefully we'll have some more for you guys.
If you guys, you know the gist now. If you want to ask Mark or myself direct questions, you can inbox us on LinkedIn or just comment below on the video. But other than that, I hope you guys have a lovely week and we'll see you next week. Take care.
See you guys.